I'm 25 years old. I don't need to worry about inheritance tax. No, you don't need to worry about it in the immediate future, but it's always worth knowing as part of that tax planning consideration, because inheritance tax is a beast. It's 40%. So unless you want to die giving 40% of your money to the tax man, it's something that's always worth thinking about. And it's something that I always bring up in conversation with clients. It's like, yes, we can do that, but do you know the impact it's going to have later down the line for inheritance tax? So property, for example, property is great. Many clients have property, invest in property, but for inheritance tax, it's tricky to manage, and you need to have a plan to mitigate the inheritance tax with it. Because if you don't, if you've invested a lot of property, you've built up a nice property portfolio worth £1 million, and you die, 40% of that is gone. What's worse for property is it's not a liquid asset as well. So if that happens and you pass your wealth down a generation, then they will need to find that cash. So they're likely to have to sell the properties to fund the inheritance tax bill. That's a position no one wants to be in. And there's certain things in business as well, when you're thinking about sort of setting up investment companies, there's an inheritance tax angle on that. So it's always worth having a discussion, knowing your inheritance tax position or the inheritance tax, what's going to happen if you do something, having that in mind and having that longer term plan. It might be that, yes, this is going to create an inheritance tax issue if I was to die now. I'm not planning on dying now. So this is what we'll do later down the line. So it's just always worth thinking about.